Sim, bom, boa tarde, vocês estão me escutando?
Good afternoon. Can you hear me?
É canal 02 aqui.
Channel 02 over here. 02.
Me, es- me escutam?
Can you hear me?
Ah, ok. Então, bom, boa tarde.
Well, then, good
Vamos
afternoon.
já começar
We'll start
pontualmente o
punctually
nosso painel
our panel
sobre atividade
on
de TI como alavanca financeira.
international
Tema
artificial
que eu diria
intelligence
que
assets as
não é tão
financial
comum assim
leverages.
que a
It's
gente
not
vê
such a
em
common
encontros de
topic to
propriedade
see
intelectual no
in
Brasil,
IP
mas eu queria
meetings
só citar
in
assim
Brazil, but I'd like to mention
algumas experiências que eu
some
pessoalmente
experiences
tenho tido mais
that
recentemente.
I've had
Tenho
recently
notado
on a
nos
personal level. I've
últimos,
noted
talvez,
in the
3 anos,
past 2
pós-pandemia,
years after the
tenho notado
pandemic,
certo
I've
interesse
noticed a certain
de
degree of interest
investidores
by
individuais, não
investors,
grandes
individual, not
empresas,
large
instituições,
companies,
mas
large
investidores
institutions, but
individuais
individual
que
investors
uma pequena empresa, uma
that
startup, ou às
open
vezes
up
até
a
um
startup
inventor
company,
individual
sometimes
que
an
tendo o
individual
seu pedido de
creator,
patente,
inventor that
sem um pedido de patente,
has a
ou melhor
patent
ainda, uma
request
patente, realmente a
without a
transação
patent
fica mais
request or a
difícil, às
patent
vezes
itself.
tem outros direitos de propriedade
Transactions are
intelectual
so much
envolvidos,
harder to come
mas tenho
by. There are other
visto,
IP
na
problems
prática,
involved, but
alguns
in
casos em
practical
que
terms,
esses
I've seen some
investidores, que às
cases
vezes são
in
grupos de
which these
pessoas,
inventors, sometimes groups of people,
instituições financeiras de menor
financial
porte, mas
institutions,
fazendo
small-scale
investimentos,
financial
às vezes
institutions are
investimentos
investing,
bastante
sometimes
relevantes
very
nessas
relevant
empresas
investments in
menores e às
these
vezes
smaller
esses
companies,
investidores
and
individuais.
these individual
Investimentos, por
investors
exemplo, a
too,
depositar no exterior,
investments
que a gente sabe que não é barato,
to
e
file
fazer a
patents
promoção,
abroad and do
promover o
promotion,
licenciamento daquela
marketing,
tecnologia.
licensing of that
Isso é a minha
that
prática
they have come
pessoal.
up with. That's my
Vejo com
personal
bastante
practice.
interesse
I see it with
essa
a great deal of
movimentação e
interest,
espero aí
this
que
kind of
se
movement, and I hope that
desenvolva
that will
como a
evolve
gente vê que
as we've
acontece aqui em
seen
outros países.
happening in other
Talvez até para
countries too,
mostrar
and perhaps even to
o
show
que a
you
gente vê
what we have
acontecer em
seen
outros
happening
países,
in other
vai falar primeiro
geographies. We're going to
aqui o
talk
senhor
about, actually, the first
Kos,
speaker
ou
will be
Michael Kos,
Mikhail
que
Kos. He
cobre,
he will
eu vou
cover,
falar em inglês que fica
I'm
mais
going to speak
fácil.
English, it's easier.
It's covering the initiatives and topics of IP finance and valuation at the World Intellectual Property Organization, a nossa queridíssima WIPO ou OMP, como chamamos aqui. Prior to his current role, he worked 10 years in the financial sector. During this time, Hercos has executed a number of cross-border merger and acquisition transactions and has gained valuation and transaction expertise in a range of industries. These situations often involve significant IP components. Mr. Kors has a master's degree in finance and strategy from the Vienna University of Economics and Business, as well as in the international management from the Rotterdam School of Management. In addition, Mr. Kors is a chartered financial analyst and a fellow of the Association of Chartered and Certified Accountants. Depois da apresentação, Kors, nós teremos uma
After
apresentação.
Kos' presentation, we'll have a presentation by Dr. Huda Gisbert. Gisbert? I hope I didn't murder your name, ma'am. Dr. Huda is a chemical engineer, an expert in technological information. She has a master's in information science and a member of the Brazilian Academy of Quality. She's the coordinator of future-inducing technologies at the Sebrae Institute. And Dr. Huda will be focused after Dr. Kost's lecture. She did mention to us that she has a practical case study to show us. I think it's going to be interesting to see, to get a presentation in more from Mr. Kost. And then later on, we'll have a practical case from Dr. Huda. Thank you so much.
Thank you. Thank you very much, Gustavo, and thanks for having me in this session on IP assets as financial leverage to the organizers of this wonderful event. In my contribution, I will give a brief introduction of how IP finance works in the first place. Secondly, I will talk about what's happening in IP finance in different parts of the world. And last but not least, I will speak about what WIPO is doing in that space. So let's dive right into the subject. Why should we think about IP and intangible assets in financing context at all? The million-dollar question. Well, actually, it's a $62 trillion question because that's the estimate of global value of IP and intangibles worldwide by our colleagues of WIPO's economics department. Currently, in major stock indices, IP and other intangibles account for 90% of the assets of the companies represented. And over the last 25 years, this asset class has seen a tenfold increase. Nowadays, it's safe to say that IP and IP-related assets are not only the backbone, but also the most valuable asset class in many modern business models. Let's take a quick look at intangibles in Brazil. In Brazil, specifically, we're seeing very positive dynamics. And the data you see here has been accumulated also by our colleagues from WIPO's Global Innovation Index team that do a global benchmarking on research, innovation, and intangibles worldwide. In 2023, the value of the top 5,000 brands in Brazil has reached $74 billion US. Since 2019, Brazil has moved up has moved up 17 positions in the Global Innovation Index to now rank 49th worldwide. And what's absolutely worthwhile to note here in that context is Brazil's specially conducive environment to unicorns. Because as we see in terms of unicorns measured as percentage of GDP, it actually occupies the 22nd place worldwide. And perhaps what's also interesting and showcases Brazil's strong momentum is has been even more visible with last week's launch of the Brazil Innovation and Development Index by INPI, which definitely provides further insight on Brazil's performance also on a subnational level, so looking at the different regions of the country. Let me now give a brief introduction of how IP finance works. The use of IP and intangibles for financing purposes is still in its infancy in many parts of the world. However, there are definitely silver linings. In some industries, for example, the use of IP and other intangibles for financing purposes has not been uncommon, specifically if we're talking about the audiovisual industries, where actually the use of copyright as collateral for loans has been a widespread practice for decades. And similar, if we look at pharma, IP bonds in pharmaceuticals are not necessarily something new. And what we have seen is that also multinational enterprises are engaging in a wide range of transactions. And here, maybe before coming to the involvement of the sentiment about IP, I would like to give a brief overview about the different structures at play. The archetype of how IP could be used in financing context is obviously IP as collateral. So that means that IP assets directly or a stream of revenues, such as, for example, originating from a licensing agreement, are pledged as collateral. And the lender can seize and monetize this collateral in the case of a default, meaning the failure of the borrower to pay back the loan. And this security of collateral provides an advantage in terms of financing costs, typically to the borrower. So it gets cheaper. That's the reason why we're doing it. And the key to that structure is that the IP needs to be of a quality that it has value independent of its use by the current owner. And there are some very prominent examples for these financing structures. One of them is the COVID bridge loan that has been taken out by American Airlines with a volume of $1 billion US, actually using the American Airlines brand and some assets like domain names as security. But we also see, and we'll come to that a little bit later in the presentation, we also see this forms of financing trickle down from the blue chip, the large cap enterprises to small and medium-sized enterprises, specifically scale-ups. A second type of financing structure that is often used is an IP leaseback or sale and license back, if you want to be very precise about it. Here, the IP is sold in exchange for upfront funding, and at the same time, simultaneously, the company is entering into a licensing agreement with the borrower. With the lender in that case. And the advantage is that the IP owner can that way increase its liquidity position while at the same time retain control and use of the IP asset. And also here we see some very prominent examples of such enterprises. Good example for that is the purchase of a portfolio of 900 patents by X, at that time it was still Twitter, from IBM, and at the same time licensing it back to IBM, a transaction that took place in 2013. The last type of structure that can be used is securitization. Here, the IP assets or rights to the revenues, for example, by way of royalties, are transferred to a special purpose vehicle. And this special purpose vehicle issues securities on that basis, the original owner. And that potentially results in better credit ratings. The key is that here also the IP has to be of a quality that it generates market value independent of its original user or creator. And here there's really a plethora of examples. I think the most famous one is the Bowie bond issued in 1997 with a volume of $55 million US, where David Bowie essentially sold rights to 25 of his albums that were subsequently packaged into securities. Similarly, in early 2000s, we have seen that taking place in the audiovisual industry, where there has been a action where DreamWorks was selling off future royalty streams from blockbusters such as Saving Private Ryan and others, with a volume of $1 billion. You can also see it in the pharmaceutical space with single asset or portfolio securitizations. And what's perhaps also interesting, this has also worked in trademarks. In the early 2000s, we've seen some very interesting transactions, such as, for example, Dunkin' Donuts brand being securitized. That was a very large volume of $1.7 billion US, and Gas Jeans is another prominent example. So in a nutshell, what we have is actually first the rationale to use IP assets purpose, and we do have the structures that can accommodate that. And what I would like to show now on this slide, which actually should have come a little later, is how the sentiment towards IP has changed over time. If you look at how lending has been conducted over the last decades, we would find ourselves very much in the left-hand side on this slide, where really IP is merely a part of a catch-all. For example, a security charge taken over all assets of the business that takes out a loan, without really giving it separate consideration. What we are seeing now is that this mindset is more and more changing towards the middle, where IP is increasingly used for comfort. Still, the decision to give the loan is made independently of the IP, but the IP is getting more and more used by financial institutions to assess the quality of the borrower, so as a signal that gives comfort to a bank. And what's the last stage we are seeing on the right-hand side here is really IP being used as a direct collateral in a large-scale context. That is normally not the case nowadays, but what we are seeing, and we'll come to that in the following parts of the presentation, there are already first instances where this is indeed happening, and also to SMEs. And I think that's very, very reassuring. So that's what I just explained to you before. And I would now like to come to the second part of my presentation, where I really want to share with you some key observations of what we are seeing in different parts of the world. And I'm going to focus on 4 key messages that got stuck in my mind when I was looking at the data and over the last 2 years was working on that space with WIPO. First of all, and I think it's very reassuring, IP finance is becoming more mainstream in this traction also for entrepreneurs and SMEs. So we're talking really about the innovators and creators that are not large multinational enterprises. You've seen the examples I presented were different, but what we are seeing now, in particular in the banking sector, is different products being created that specifically cater SMEs that are not necessarily in the startup phase, but that have a proof of concept, generate first revenues, and have a minimum viable product that can support actually debt financing. And with 2 interesting developments in that space, and these are being, it's really interesting. Somehow the slides got mixed up. Our HSBC's creation of a 350 million growth lending fund that is focusing on scale-ups and provides relatively small-scale tickets using IP as a key indicator for quality of the borrower. And also other lenders have recently engaged in this more and more, and a particularly interesting example of that is NatWest Group. Here, the IP is really used as direct collateral, and we're talking here mostly about patents, also brands that are being used, and the average ticket size is below 2 million British pounds here in terms of lending. So we're really now moving more into an SME space. And I think what makes this interesting is that this really marks a shift from IP just being not used at all or just providing a little comfort more and more towards IP being used as collateral. So that was the first message I would like to place here. The second one, we have seen now different solutions evolving to address the risks associated with IP-backed lending or IP financing structures in general. On the one hand, these can be institutional solutions, such as we are seeing, for example, in the Asian region, where in China, essentially there are government guarantees taking care of the problem, what happens in default, or in Korea, where there is a recovery fund in case the borrower defaults on the loan. There is a specialized institution that can handle the workout of the loan. But in the private sector, we are also seeing increasingly insurers taking a very interesting position in that from a solution standpoint. A good example for that is Aon. And Aon has, over the last years, facilitated more than 40 IP-backed financing transactions where IP has directly been used as a collateral with a volume of approximately $2 billion US. So we're not necessarily talking small numbers here. And what's interesting about Aon is that here we are not seeing patents being used alone, but this is more getting now into trademarks, data, and even trade secrets. So also, it's not only the solution that's evolving, the type of financial product that is being provided, also what is being used in terms of IP rights. And that's relatively new and avant-garde. The next takeaway I would like to present to you, and that's the third one, is that IP finance is indeed growing. And here I've got two prominent examples from our country reports in China and Korea. And what we are seeing that in 2022, the volume of IP-backed financing, so financing that is really backed by patents and trademarks in China, has exceeded $67 billion equivalent. And an interesting fact about that is that this went to 26,000 companies. So the average loan size that's being provided was about $2.4 million. So not necessarily large ticket sizes, but this is really something for the mass market there. And a similar picture, albeit at a smaller scale, we are seeing in South Korea, where at the same time in 2022, the volume has been approximately $2.2 billion equivalent, so 3 trillion won. And now I come to the fourth key observation I would like to share. IP finance is really gaining momentum. So here you have the hard evidence that it is indeed taking place. But what we also see is that there is significant interest from different part of the community. And that's not only just the IP profession, but it's also the business community and the policy making to move this ahead. And we can really see at this point that discussions in different parts of the world are really picking up pace. And in the following section, I would now like to introduce to you the work of WIPO and what we're really doing in the field of IP finance. So very much the core of my presentations, as usual. Let me briefly, on the basis of this slide, outline the building blocks of WIPO's action plan, which includes 3 elements. The first is we are really trying to bring attention to the potential IP finance to a broader community. The second is we are focusing on closing the information gap. The key here is really to provide quantifiable insights into best practices so that these can be replicated and shared across countries. And that specifically is aimed to give policymakers and also the financial sector the hard data they need to make educated decisions about IP finance. And last but not least, which is an integral part of WIPO's action plan, is the need to be focused on the stakeholders on the ground. And that's really what we're trying in this third pillar. This one is really about equipping those that want to make this operational in the real world and in settings. And I would like to highlight these items now on the following slides in more detail. So first, we are raising the profile of IP finance to a broader community. And a core pillar of this strategy is WIPO's IP Finance Dialogue, an annual recurring international conference where we are bringing together the community, meaning we're focusing on senior leaders from financial institutions, international organizations, and the business community to really speak about IP finance in detail. And we've also heard yesterday how important it is to bring together a diverse set of stakeholders. And that's really the approach we are following. In November 2023, the second of this series has taken place, and we focused very much on IP finance and IP valuation. And what's interesting, and perhaps on a side note, I would like to share with you that this event also shared the findings of an expert consultative group that we created and convened earlier in that year, because what we are doing is we are also complementing the publicly visible and open format of our annual conference with specific groups that behind closed doors in a more familiar setting, discuss how certain topics can be tackled that we take from the broader conversations. And here, specifically, IP valuation has been identified as a major roadblock. And so we convened a set of 12 really high caliber experts in IP valuation and individuals with a specific stake in IP valuation. And I'm happy to share that Mr. Gabriel Leonardos, the chairman of the ABPI, was also a member of this illustrious group. And thank you very much on that note for your valuable contribution. The second pillar of our strategy is closing the information gap and provide the insights into best practices. And to do that, we launched a report series that delves into... Oh, I'm sorry. Yeah. Yeah, sure. Wonderful. This report series delves into different country experiences and what different governments are effectively doing to facilitate or enable the use of IP for financing purposes. And we've currently about 20 countries participating in this project, which could be considered as an international stock-taking exercise. 7 reports have already been published. You see these outlined here on the left-hand side. These are China, Jamaica, Luxembourg, Singapore, Switzerland, Turkey, and the United Kingdom. And these country reports are all publicly accessible, and you can see the QR code on the slide. So it's all on our website if you want to take a look. And perhaps some of you have seen yesterday's table topic 3 on IP finance and valuation in Brazil. If not, it's really something I can highly recommend. And I think Mr. Miguel de Carvalho has provided a very interesting insight on, what's happening in different parts of the world. So a synopsis of the 7 country reports that you see here. So if you're interested, that's definitely something to look at. And of course, what's interesting is also the pipeline. There are several more country reports to come, and we're currently also working on one in Brazil that can be expected in the 4th quarter of this year. I said I didn't want to go too much into the details, and I won't present any details on the different findings, which are very varied on a country-by-country basis. But what I would like to do is to tell you about one overarching theme that we came across in pretty much in all cases. While in principle IP finance can be used, to benefit the communities, we have received feedback in all countries that there are differences in language spoken between businesses and the financial community, and that's really that really becomes evident when we're talking about IP. And what we have done is taken that and used it in our action plan to focus really on the 2 sides of the transactions. On the one hand, explaining to IP owners how they can better explain what they have in terms of IP to a lender, and on the other hand, helping the banks and the financial institutions and investors to better understand IP as an asset class. So these 2 initiatives I would like to highlight on the following 2 slides. The first one is the hands-on guide on IP finance for IP owners. And as said, here it is really about preparing IP owners, entrepreneurs, innovators, and creators to have that conversation with a lender and explain what they have to them. And it involves the deal preparation. First of all, getting a portfolio of IP that they have in order, identifying assets that can be used lending purposes, and really describing these assets and connecting them to a business plan. It also involves informing the IP owners about structures when they are looking at lending, setting expectations, and some other aspects such as confidentiality, for example. And what's interesting is that we focused very much on a practical applicability of this tool set. So it's much less about being a text-heavy publication, but more a compilation of checklists and toolkits that can be used and really on a step-by-step basis guide the reader on how to approach that. The second initiative we are doing here is the IP Finance Pilot. And this one is really about providing support to financial institutions and funds, whereby we are dividing the participation in the projects in two parts. On the one hand, we have the financial institution focusing on what they are doing best, namely developing a product, focusing on their customers, and analyzing the local IP ecosystem and the opportunity at hand. And what we are intending to do here is to, as WIPO, we are very well positioned to really provide the financial institution with the necessary guidance to better understand IP. So if you think about the standard elements of IP due diligence, for example, about ownership, connecting IP assets to a business plan, and assessing if these have standalone value that could be relevant for a financial institution. And in doing so, we can leverage our experience and draw on the tools, on the toolkits that we have available, and focus on a knowledge transfer to the financial institutions. So just to sum it up, in a nutshell, WIPO's approach in this third pillar is really about equipping stakeholders on both sides of the transaction with the tools they need and promoting best practices. And in my opinion, that's a good complement to what we are doing in the first pillars about raising the awareness and providing the evidence base. So we have almost reached the end of my presentation, and I would now like to come to the principal conclusions. And these key takeaways are: there is indeed a place for IP being used in financing, and taking advantage of this may take effort and, of course, education. And I think we are well positioned to work with the community to facilitate the type of knowledge transfer that is needed. And maybe the last point is the most important one. People are figuring out IP finance and are starting to consider IP in financing context more and more. It's time now to move IP finance from the margins, from singular transactions to the mainstream, to a broader application, including the SME space. And it will definitely take a community to move ahead here. And I mean, I'm actually in that context very happy to see such a large community of interested people sitting here in front of me. And thanks for being part of that community. With that, I would like to give the floor back to Gustavo as the moderator. Thank you.
Boa tarde a todos.
Good afternoon, everyone. Can you hear me well on the microphone? Yes, thank you. I would like to thank ABPI on behalf of SEBRAE for the invitation to take part in this panel, mostly because SEBRAE, it has the sixth most valuable brand in Brazil. It is not a foment institution, and they don't work directly with international intellectual property. We have been invited to be on this panel, to join this panel to talk about our experience in supporting and boosting small businesses and how we look at the question of IP leveraging the financing in general, the leverage, financial leveraging as a main issue here, reflecting upon the best approach we could bring to your attention on this panel. And we see that even though SRI has had a very important, significant operation supporting millions of micro and small companies and entrepreneurs, individual entrepreneurs in Brazil. We've had an operation that's not so well known by people, which is the foment to technologically based companies. And it is with these companies that we're doing, shall we say, the first experiment. It's the catalyst in which we have delved into it to look at how intellectual property may or might generate differentials for financial leverage for these companies in particular. I will be talking about this project, Catalisa. We work with technologically based companies, foundation companies. It's a project of acceleration in which we do the promotion of knowledge and the connection of that knowledge, which is at the universities, with the market. We join them with the market. Basically, it is this acceleration, that's what we bring through Catalisa. That's hence the name Catalisa, because we have many institutions in this project. Each one of them has its own expertise, so we can catalyze, we act as catalysts on this knowledge that is at the university level and it needs to get to the market. It is an incipient project in which we select, it's a growing project actually, we select research studies at the university for master's and PhD students with the potential to transform them, to turn into innovations. They go through this funnel and they go through capacity building sessions. We know, we say it's a funnel because there are many call for papers and they need to prove and comply with a list of attributes to get foment and to get financial support. And what we have done on this journey is to try and introduce from the very onset the contents related to intellectual property. We have introduced that through a strong partnership with INPI. Within this project, they do provide mentorship to these potential companies because the great objective of this program, the goal here is to convert technological solutions that came from university out of the research of a master's or a PhD program into companies themselves. The problem, the point here is to generate new companies in Brazil, highly qualified companies, natural legal entities that have a great deal of potential and that they want to uphold their own intellectual property on their patents and their products. And that's a valuable asset to leverage financing to boost the search for lines of financing or credit. That's what we've been working on, and that's what they're keen on doing. In the last stage, we did the last call because, and at all stages, we do the public call because we cannot close the doors only to those people. We cannot actually limit everything to only to the people in that funnel. SEBRAE is banked by public funds, and we need to give publicity to these calls for papers and participants. We had in December last year a public call, and among the criteria for assessment that were taken into account, we provide a greater weight, a significant weight to the technological differential of the solution proposed. And this technological differential includes IP protection. And we evaluate whether they are on the way to ensuring upholding protection to their patents. That would be the first stage to get to the process of assessment and evaluation of that technology. Are you looking for ways to ensure the protection of your IP? When we analyze these technological differentials in the solution, we assess, for example, and the criteria, whether these projects present solutions for the technical challenges. And mostly, whether the company has inclusiveness to explore these technologies. That would be the greatest score. You will notice that it's as though we were educating those researchers and entrepreneurs so that they'll be able to consider and take into account from the very inception of their startup companies. When they reach a certain level of maturity, they'll be taking intellectual property as part and parcel of their development. We had 931 candidates, and we selected 132 participants. We have participants from 25 states. We have participants in this group that you see, 152 companies. You see them on the screen, and they're different areas of application. We're talking about the areas, and the area with the greatest impact is it's medical services and health services, but we also have the large participation of livestock raising and agriculture, agribusiness, chemistry, foodstuffs. We're talking about a wide array of areas for projects that are being contemplated. And mostly when we observe the technologies that are involved, really we're working on emerging technologies, nanotechnologies, artificial intelligence, Internet of Things, radiopharmacological products. These technologies, that's what we're actually tackling, and we're working. We're dealing with products and processes. These are differentiated startup companies from a larger group that SEBRAE is actually used to providing foment to a digital world startup companies. They don't come up with just new business models. They're talking about new products and new processes, and these are companies that have a great deal of potential when it comes to the protection of their intellectual property, and they are at a stage of maturity above 5 on the scale of technological maturation. They are above level 5, so at least level 5. So their products have been tested at the very least in functional ways, and they will depart from that foundation to advance towards the market, to approach the market with their products and services. This call that we've selected goes for 9 months. There are many collective mentorship programs. We provide capacity building, and one of the capacity building initiatives that's most demanded by them at the current time is the question of valuation of technology, technological valuation. What I've brought to you, in fact, to use intellectual property as a financial tool, it's a topic that's still taking its baby steps, and it's in its infancy in many countries. Really, we've noticed that. We know that there are companies, technological companies with robust solutions, but they're up against a lot of difficulty assessing the valuation of their technology. So we will need a great deal of knowledge about this subject. When we run a general analysis of this chart, number 50 companies that are participating in our program that have responded to our call, we see here that we have they have requested patents. We have 71 companies. Almost half of them are convincing the capacity building, but provided them with, they understand the importance of the patent. We are still in our infancy, taking baby steps. And when we do the follow-up of those companies in the course of the acceleration to see the technological readiness, we always have in mind the criteria of the strategy, full property. And we're advancing, we're taking strides, and it's one more factor to be taken into account on this long journey. It's quite a promising journey. When we ask these companies, whether they have already sought out investments. 2 weeks ago, actually, we've been following up on them. 34% of them said that they had already received investments. And when we let's analyze those 71 companies that said they had already filed for patent protection. Let's see if they will change that percentage, if the percentage rate will go up because they got investments. That's the universe of the 150 companies. 34 of them have already received investments. Of the 71 companies, the defects with patents, those who had received investments, the percentage. So the conclusion we got from that is that they are not using
como fator na negociação de investimento. E por que está acontecendo isso?
Their investments. And how come that's happening? But either because they don't know how to value that IP asset, or because investors are not taking into account that important factor when allocating their investments. It's a case, for example, we thought it would be a case study, for example, that I thought of bringing to your attention. The intellectual IP as an intellectual asset might be a key a component of financial decisions, but there have been hurdles that have not yet been overcome. And I will talk about this question briefly. I have brought to you, excuse me, sorry, I got mixed up. If you will please give me a second, I'm going to go back one slide. Please bear with me. Okay.
Aí, para não trazer só essa reflexão.
Just to bring you this reflection that allows us to understand these reasons, I brought you another piece of news linked to an IP asset that's a geographical indication. In Brazil, we're still starting to leverage that asset. And SEBRAE has been working on the subject matter for a while, for 20 years. We have 117 geographical indications registered in Brazil. Compared to the European Union, that's very little. They have over 3,000 geographical indications registered, patented. But to our surprise, SEBRAE was sought out by SICOP. It's a financial institution. They knew our work, and so that they came to us to invest funds in CITRAP and the territories that have geographical indication, sealing agreements with the entities and managers of those geographical indication areas. You will wonder, can you do that as a financial institution with agencies scattered around the country, cooperative banks, many of them in the countryside, for example, and small towns? You could seal agreements through many mechanisms. And why are they seeking out geographical locations? Because there's a record of intellectual property and they see value in that. So I think that that is a case for us to celebrate in Brazil. A financial institution is deciding about the application of its financial resources and FOX, the Technical Assistance Fund, and territories that bear geographic indications. Of course, they're seeking out prosperity on the ground. You want associated members that will make the right investments. They do have a bank account, and they have a bank account with SICOP, and that will actually boost the local economy. But the criteria used to direct those investments were IP assets, and that's the geographic location alone, mostly. And I brought you this case for you to reflect upon as food for thought, general food for thought and reflection on IP. We've noticed here some businesses and small businesses in general, they don't understand IP, as a tool for financial, important tool for finance. They have a hard time understanding the whole set of intellectual property of assets as a financial leverage. When we talk to them about strategies of intellectual property, all they think about is patents. So it's difficult to open up the possibility, to open up their understanding so that they'll use the brand, industrial design, and whatever it is that will allow them to look beyond patents themselves. And they don't consider, since they don't understand, they don't see it as a strategy to leverage funds, to seek out finance, lines of financing, to secure lines of financing. So they must build new approaches and strategies with investors, because if they start doing that, the investors themselves will start thinking likewise, and they'll understand the importance of IP as an asset. That IP assets must be taken as a guarantee, for example, when companies are analyzed and vetted. Another case, I'll give you an example. Sebrae and FINEP have a fund, the Innovacredi, and they provide funds, in this case, reimbursable funds for small businesses. And this fund is operated by financial entities. None of them, I have looked for information, none of them uses IP as a collateral, as a guarantee. None of the financial institutions of Novacrat uses IP as a collateral, for example. I'm giving you real-life examples from Brazil, small businesses, for us as food for thought, so we may reflect upon the topic of this panel and how important it is. Thank you so much for your attention. Thank you. Can you hear me well? Well, thank you very much, Michael. Thank you. Dr. Roda, I think those presentations were very, very illustrative. I'm looking at the tablet. We don't have any questions from the from people online, and I'm wondering if we have any questions from the audience for our Q&A session. Yes, sir. Dr. George Avila has a question or comment. Huda, how are you? Congratulations. How are you doing? I was very curious with the absence, with the omission of intellectual property and the pitch of the companies that are seeking resources. I heard many pitches, and sort of companies always talk about IP patents. Not all IP assets, but the patents were highlighted. I participated in some marathons, hackathon and investment marathons, activities of that nature, and I was stripped as an investor or evaluator at hackathons. The question of intellectual property protection has always been at the core. I'm wondering if you don't have a problem of capacity building to our startup companies when they do their own pitch, and if they're missing out or leaving out information that would be very relevant, it would be helpful so that they actually can secure more funds. And I would like to ask Michael a quick question on the use the world over on IP as a collateral and loans as a loan collateral. Has it grown, the use of IP as a loan collateral? Long-term loans, for example, more specifically. Thank you. Hi, George. How are you? Thank you for your question. We have indeed given information to companies, the companies that are under our mentorship and our acceleration program. We have told them about the importance of including information on their pitch related to IP, but they're focused on patents alone. We've noticed that also. Our idea is that they should cast a wider net, talking about other assets as well, not just IP, but other intangible assets as well. May I compliment the question from Michael? Just as a compliment, Michael. WIPO is also making contacts with national development banks like, for example, the large BNDES in Brazil, and there are many development banks, international development banks, aimed at the increase of the use of IP assets as collateral, loan collaterals. Is that the case, sir? I'm wondering if you've heard of those agreements, development banks in the world and loan collaterals.
Yes. Okay. Thanks. Sorry, it took a while. I hope I'm coming through very clearly. Okay. We are indeed connecting with different development banks across the world, and these are on the one hand national development banks. If you think about, for example, the Development Bank of Canada, the Canadian Business Bank, or regional development banks such as the Inter-American Development Bank or the Asian Development Bank. So there are these connections we are obviously trying to establish. So far, I have to say one thing, with the Brazilian National Development Bank, we were not in direct contact, but we are definitely seeking that, because what we are realizing that in particular, as IP finance is very much in early stages, this needs a catalyst. And normally it doesn't work if you rely on a private sector involvement alone from the beginning. So I think development banks can be very powerful in bridging these first difficulties in acceptance of IP being used as as financial leverage. I hope that answers your question, Gabriel. Sorry, coming back to your question, Jorge. I think it's a very interesting question because there is no clear data set about the maturity or term of IP loans in general. So we do understand that in parts of the world these are more often used for short-term bridge financing, but I think in general these are used for long-term financing purposes. But I have to admit that at my fingertips, I don't have the hard data to provide you with a clear picture. I hope that answers the question.
Oi.
Hello.
Boa tarde.
Good afternoon. Can you hear me well?
Eu tenho uma pergunta para o Michael.
I have a question for Michael.
Sobre, eu acessei recentemente
I read a study by WIPO recently on investments in intangible assets. And that report, published in the beginning of the month, says that there has been growth, consistent growth of investments in intangible assets. But what drew my attention to that report is that the greatest investments in assets related to software data and organizational capital. These are assets that are not the patents that you talked about, that normally are the most frequently used for financing and other trends. The view of investors. I'd like you to tell us about how can that be? I mean, the world is investing more in intangible assets that are not the patents themselves, but it's the patents that end up ensuring the success of loans. That's the doubt I had after your presentation. Basically, that's what I'd like to have you explain to us. Thank you, sir.
First of all, thank you for the question. I think it's an excellent one because it also highlights, the data difficulties we are dealing with. I mean, I'm perfectly familiar with the work of my colleagues in the economics department, and what they are using really is the gross capital formation. So they're coming more from the economic side, I mean, obviously, but looking at aggregates that are collected very much at the national level in terms of output, and how that flows into concrete classes of intangibles. As you rightly point out, what we see today is that to a very large extent, these investments flow into an unattributed category. So just maybe from a simplification perspective, if you are saying that R&D flows into patents, you have to be very, very careful to meet certain criteria so that these research and development expenses can indeed be fully attributed to a patent at hand. And normally it's not that simple. And what you see very often happening is that the remainder of such expenses or such investments get categorized in residual categories that are more general, like organizational capital. It can mean a lot of things. And so it can mean processes, it can mean innovation capability even of an organization. It can even mean human capital. I mean, I'm not sure if that's what the economists have taken, but just conceptually. And you're also right in concluding that when we are thinking about using IP in financing context, it gets much more easier the more concrete the IP is we have at hand. So the more tangible, if you want, the IP indeed is. So if you are looking at registered IP rights, there's definitely an advantage as compared to unregistered ones. Or if you look at sort of the harder, more identifiable ones, such as patents, trademarks, copyright, vis-a-vis, say, trade secrets, data is an intangible, that's of course relevant, but here the acceptance of the financial world, decreases the more vaguely these assets are being defined, and that's, it's very much at the foundation of what we're talking about, because you have to use it as a security, and if you cannot really, provide an evidence of ownership, for example, like with data, it could be a little tricky, then it gets even more difficult for a bank to accept that as a security. I hope that answers the question.
Okay. Vou declarar encerrado.
Bom, muito obrigado. A participação
Thank you to all. Dr. Arruda, Michael,
de acordo com a chefia, temos que encerrar aqui.
and we have to close this session.
Pode ligar o alto-falante?
Morning.
Ligado já, o alto-falante?